Hello, everyone. My name is Tara Alderete, Director of Education and Community Relations at Money Management International. Thank you for joining me as we talk about financial help during this difficult and uncertain time. Right now, with the temporary closure of businesses, schools, and many public events, you might feel alone, but of course you're not. We're all in this together. These are unprecedented times that will require us to take stock and utilize the resources around us. So, whether you've experienced a layoff, reduced hours, loss of income and tips, or increased financial expenses, know that many organizations are rallying to help those impacted by the coronavirus. That includes government, state, and local programs, as well as many of your creditors. Knowing where to go for help, what to ask, and how to document your situation are all key aspects of getting the help you may need. So today we're going to talk four main strategies around managing your finances during and after the pandemic. We'll talk about how to analyze your available resources to keep your household running and get the help you may need. We'll also look at a priority-based spending plan using the resources we've identified. Then we'll talk about how to work with your creditors to ask for forbearance, payment arrangements, and other options. And lastly, we'll talk about implementing a recovery plan when the pandemic is over and your finances are getting back to normal. So let's get started. Many of you have probably heard the term beast mode, usually when people are talking about sports or competition. But right now, we need to think about putting ourselves into financial beast mode as we tackle our financial situation. What this means is that we're going to explore all the options, maybe make some difficult choices, and have some important conversations in our household and with our families. Because we all have one goal in this, and that's to get through the current crisis with the least impact to our families. And that includes our family finances. So that means we'll put everything out on the table and do what it takes. The current situation is constantly changing, so it'll be important to stay connected to updates and also to openly communicate at home to make sure family members are all on the same page. Having a family meeting is a good first step. Be sure to include kids in the discussion about the current situation and how it might be affecting everyday life, but also possibly your finances. While we never want to frighten or burden our kids, we also don't want to keep important information from them. If you have older children living at home, it might be necessary to have them contribute right now by using their own money on everyday expenses, whether it's money they've had saved from a job, savings, or gifts they've received. And if that is the case, be sure to set up a tracker so that if you do use this ready cash on bills, you can make the commitment to pay it back once your full income is coming back in. It might also be necessary to forego some expenses that everybody in the family could be taking for granted. Once everyone's on the same page and the lines of communication are open, it's time to analyze your resources. So, right now, it might not feel like you have too many resources to analyze, but you probably have more than you think. So, we'll take a look at all the different ways you can find and leverage cash and community resources to help get you through this time. If you have emergency savings put away, now might be the time to use it. It can be hard to dip into your savings, but it could help you avoid creating debt to handle necessary expenses while your income is reduced. Now, if you do use money that you've put away, it'll be important to maintain whatever adjusted budget you create once your income gets back to normal. This will allow you to replenish those emergency funds as quickly as possible. If your job and regular pay have been impacted, you might qualify for unemployment benefits. First, if you're part of a union, be sure to contact your union representative to see if any assistance is being offered through them. The Department of Labor also has new options for states to amend their unemployment laws to provide benefits if your employment has been impacted by coronavirus. CareerOneStop.org sponsored by the Department of Labor, is a great website where you can find more information about unemployment benefits. And also, there's a good tool if you scroll down to the bottom that will help you identify eligibility and file for unemployment insurance benefits in the state where you live. So you just scroll down, locate the state where you live, and you'll be taken to your local site where you can identify additional resources and the steps you might need to take. If your household has more than one income and only one person's pay has been affected, there are a few ways that you might be able to temporarily increase take home pay of those that are still receiving paychecks in the household. So, first, review your withholding selections and maybe make temporary adjustments to them, especially if you've been receiving income tax refunds. A lot of people don't complete their W-4 with all the exemptions that they could, and they do this in order to receive a refund or make sure they don't owe taxes at the end of the year. But this can reduce the take-home pay each paycheck. So if people in your household still have paychecks coming in, they can make an adjustment to their W-4 at any time. And you can do this easily by contacting your payroll department. And in a lot of cases, you can do this yourself by just logging into the HR website or system and then completing the new W-4 electronically. Also, if you pay state income tax where you live, you can review both your federal and your state level withholdings. Similarly, others in the household might be contributing to a 401k or a 403b, or using payroll deduction to put money into a savings account. So now might be a good time to examine those deductions and consider stopping them just temporarily to bring more cash flow that you need right now into the household. It's very easy to start and stop these kinds of payroll withdrawals, and you can do it very quickly and easily. And it can help you free up funds that you might be able to use at this time to get you through the crisis. I want to talk for just a moment about gig economy because although typical gig economy jobs that we've seen, like Uber and Lyft, have been heavily impacted, there are some positions that are in higher demand and actually hiring right now. So if you need to bring some extra cash in and you're looking for work, you might consider things like service delivery driving or work from home contractor opportunities. These are just some things to consider if you're looking to bring in some extra cash or income into the household right now. Now, if you're a small business owner, you could be eligible to apply for a low interest disaster loan through the Small Business Association. Go to their website at sba.gov. They're working with states to provide targeted low interest loans to small businesses and nonprofits that have been severely impacted. And many banks are offering assistance and making policy changes too. So bankrate.com has compiled a list that will be updated regularly. And this list includes financial institutions and banks and what kind of support they're offering. So check that out. But also, it's a good idea to contact your creditors directly. And we're going to talk more about this in just a moment. But right now, while we're on the topic of banks and loans, I want to talk quickly about using credit cards to pay for bills. Credit cards are generally one of the more expensive ways to close the gap between income and expenses. This is because the interest can really add up. If you have to consider using credit to get through this crisis, start with your lowest interest rate options. These could be bank or credit union loans instead of credit cards. But if you do use a credit card, be sure to use the one with the lowest interest rate first. Another thing is, you could be tempted to take out money from your retirement plan. Please keep in mind that unless you're 59 and a half, this will have a 10% early withdrawal penalty and could also have tax penalties. Many plans also offer loans, but there are different considerations depending on your situation. So start to look at these types of loans or withdrawals only if absolutely necessary as a last resort. There are so many other resources that are available right now to help us get through. I know some school districts are providing free meals at school pickup locations or bus stops. So if you have school-aged children, contact the school to find out if this is an option where you live. Also, many utility, phone, and internet providers are offering help. They're doing this either by suspending disconnection fees, suspending regular fees, disconnections overall, offering payment assistance programs, and in some cases, even by offering free access to internet. So contact your service providers and then service providers in your area, or do a search of utilities from the United Way website. So, United Way Worldwide has created a COVID-19 Community Response and Recovery Fund to support local United Ways and 211. 211 is their source for information in times of crisis. So I urge you to visit 211.org/services/COVID-19 and then scroll through so you can find links to available resources. Once you're on the page, you can also search by zip code, city, or state, and then find local United Ways where you can get specific resources based on where you live. This is a fantastic resource. Things are changing so fast right now, and new options are being offered all the time. As of this recording, there hasn't been a specific program adopted by all creditors or a precise stimulus plan for consumers announced, but there have been many suggestions and discussions to be sure. So make sure you keep up with your state and local news. Here at MMI, we're dedicated to providing regular updates so that we can help consumers navigate through this unprecedented time. So please bookmark and visit www.moneymanagement.org/coronavirus. There, you can get regular updates and you can also sign up for a success newsletter. And in the newsletter, you'll receive ongoing tips on creating income and stretching your budget and just really getting through financially during the pandemic. So now, once you've taken stock of the resources that are available to you, the next step is to evaluate your budget and develop a priority-based spending plan. This might sound obvious and easy, but it can actually be hard to do. We become accustomed to living a certain way, and sometimes the line between what we want and what we need can get blurry. But now is the time to reduce those expenses as much as you possibly can. And this might not be fun, but it is necessary. And that family discussion will help because it really is going to help to have all your family on the same page when it comes time to tighten the budget and reduce expenses. So start by taking a hard look at the expenses that you have, the things that you spend money on every day, week, or month. Identify priority expenses, and these include things like shelter, so mortgage, or if you're a renter, of course, it would be your monthly rent payment, food, utilities, insurance, transportation, medication. These are the must-haves. But even on priority items, it's important to resist the urge to overspend and engage in mass buying. So we're seeing a lot of that right now. It's recommended that we have a 2-week supply of necessary items on hand for a quarantine or other emergency situation. And while it's definitely important to have a reasonable amount of necessity items on hand and available, it's also critical that we're really smart with our money during a crisis. So when considering expenses, everything that's not a priority has to be deferred as much as possible. Even expenses that are on a monthly contract, but they might be negotiable. So you'll have to contact those service providers and ask. It might not be pleasant right now to think about cutting your cable or apps or streaming services, but it just might be necessary to get you through the current financial situation. The other thing is, with many gyms, activities, and entertainment venues temporarily closing, now is the perfect time to save money on personal and entertainment expenses as well. One good thing about the current crisis is that social distancing guidelines might be a great opportunity for us to spend quality time at home and with our family. So take this time to get back to the basics on free entertainment. Have a family game night, have a family movie night, cook more at home, go for a jog or walk outside, or go for a nice bike ride. I'd like to talk for just a moment about insurance. Now, insurance protects us and mitigates risk and disasters, we know. And certainly, we don't want to let your insurance policies lapse. but maybe you can temporarily increase deductibles and reduce the premiums. So especially if you have a situation like where you cover a teen driver, you might also consider removing them from all but one vehicle. Whatever the situation is, please take a moment to call your insurance agent and just ask what they can do for you temporarily. They might also have some options to postpone or make smaller payments until your financial situation changes. If you have health insurance, keep in mind that currently the coronavirus is covered by health insurance providers very similar to other illnesses. And even though testing might be free, you'll still be responsible for regular copays, deductibles, and out of network fees for treatment. So the bottom line is, from entertainment and personal loans to insurance, call those service providers and ask what options are available to help you get through this current time. Now, if you can't meet all of your financial obligations, the third step is to work with your creditors. This is going to be hugely important. And I mentioned this briefly a few moments ago when we talked about resources, but working with your creditors and financial institutions really could be key to helping you manage your finances and recover strong. So we've already established a priority spending plan and identified those priority items that we'll list. And these items on the sticky note that we see here, along with food, are some of the top priority items. But what if, even after you've examined your resources to maximize cash flow and you reduce your expenses as much as possible, you still can't make regular payments or you can only make partial payments to your creditors? Well, as we said earlier, many creditors are implementing programs to help out if you've been impacted by the coronavirus. But it's up to you to reach out to them because while help might be available, they aren't likely to automatically give you a hardship plan. So it'll be important to call and ask for assistance. Some programs are already in place to help stop evictions and foreclosures in many states. And also, many mortgage services are offering help in the form of hardship forbearance options for homeowners who are struggling to make their mortgage payment right now. But if you rent, contact your landlord right away and ask about rental assistance and forbearance. The same goes for student loan servicers, auto loan providers, credit cards, and then any other creditor that you might owe. A forbearance is a temporary reduction or suspension in payments. If you're given this option, you'll have to pay the forbearance amount back when your regular income resumes, or especially in the case of mortgage loans, you might qualify for another workout option or mortgage modification to get you back on track. Creditors could also offer other solutions, though. It might be in the form of reduced payments or fees or just different hardship plans. So be sure to stay up to date with ongoing changes and programs that are being offered. New ones are being changed and added every day. And make sure you ask your creditors about specific options you might qualify for and also how they'll affect your account and credit report. Now, when you do talk with creditors and service providers, be sure to take notes. You'll want to write down the date and time of your call, what number you called, the name of the person you spoke to, what you were offered, and then ultimately the plan that you agreed upon. Then be sure to monitor your monthly statements to make sure that you're receiving the assistance that you discussed. And then once you agree on a workable plan with your creditor or service provider, put a letter together summarizing the details of your discussion and then send it to them. You'll find the customer service mailing address for most creditors and service providers right on your statement, but it's also available on their website. This is a great idea to not only keep the details organized for your own situation so that you've got documentation and organized details about the plans that you have and what's required and what the outcomes will be, but also to keep note in case anything goes wrong or changes on that plan. You've got written proof of the plan that you agreed upon. Now, it might take some time, but things will get back to normal, and eventually you will start receiving regular paychecks once again. But when that happens, you might still need to work on repaying loans, bringing accounts current, and checking on your credit report and score. So let's take a few moments to talk about that now and also how to build a plan for future emergencies. Let's talk about recovering strong. Once your regular paychecks resume, first pay off any loans, credit card debt, or other obligations as quickly as possible. You'll want to pay those obligations first and consider maintaining the priority based spending plan that you created until you've repaid those obligations in full. And of course, these would include things like forbearance payment amounts, short term borrowing, and debt. Know your rights. If you do happen to get behind on bills, or if you were already behind before the current crisis started, if you receive calls from debt collectors, they must follow the Fair Debt Collections Practices Act. And be sure to monitor your credit report over the next 12 months and then regularly every year to ensure that creditors who promise not to report delinquencies or partial payments do so. You can order a copy of each of your 3 credit reports for free annually. Those reports are provided by Experian, Equifax, and TransUnion, and you can order them at www.annualcreditreport.com. We suggest ordering one about every 4 months so that you can cover the entire year. The other thing is many banks now offer free credit scores, so monitor that as well. If you'd like to obtain an official copy of your FICO score, you can do that for a fee by visiting myfico.com. If you have negative reporting on your credit report because of the coronavirus pandemic, you can place a consumer statement of up to 200 words on your report that can explain the situation. If you do choose to make a consumer statement, here are some tips. First, be succinct. You don't have many words to work with, so you'll want to be clear and use specific dates, names, and supporting evidence if at all possible. The consumer statement gives you the opportunity to give the facts about the situation to potential lenders or creditors. So, for example, let's say you've been the victim of identity theft and you've disputed fraudulent charges, but an investigation doesn't resolve the dispute. A personal statement can help explain the situation. Next, don't make excuses. A personal statement doesn't carry enough weight to counter a lengthy series of credit problems when written as an excuse. So I forgot to check my mail, I forgot to mail the check, things like this. A personal statement can be interpreted as an admission of having poor money management skills rather than an explanation of a one-time event. So again, you'll want to keep things concise, clear, and accurate. Third, realize that your statement may not sway lenders. Because personal statements aren't factored into your credit score, they might not influence whether a lender ends up granting you credit. But if you take time to write a thoughtful and specific statement, it could demonstrate to the lender that you're educated about your rights, you take your credit score very seriously, and you're proactive about managing your finances. And then finally, remove the statement when the information is deleted. After your creditors stop reporting the information to which the consumer statement refers, you might want to remove the statement from your credit report. If not, it could alert lenders to credit issues that you had in the past, but you've since resolved. I'd like to talk a moment about building emergency savings. And I know this could be the last thing you might want to think about now, putting savings away. It's very difficult to think about future emergencies when you're in the midst of a stressful situation. But once the current crisis is over, consider revisiting your budget as a family and committing to a pay yourself first strategy of savings through payroll deduction. Consider putting emergency savings in a separate account that you don't touch unless an emergency occurs. Maybe you set a goal to save $1,000 in an emergency savings fund over the next 12 months after the pandemic is over. There are a lot of different ways you can accomplish this. You might commit to save $83 to $84 every month, or you could use a step-up plan where you save incrementally larger amounts until you've reached your goal. However you choose to do this, set that goal. And after you've saved $1,000 in your emergency savings fund, continue to build until you have a cushion that would allow you to pay your expenses for at least 3 months. This is going to be critical in the event of another financial crisis or emergency situation. After you're back on your feet, if you still have debt, consider implementing a rapid repayment plan to pay it down. This is sometimes referred to as a debt snowball or debt avalanche. And you can look at it using a debt repayment calculator to pay down debt as quickly as possible with the least expense. There are several different websites that can help you create a debt snowball or debt avalanche plan, and many of them are free. You can also go to our website, moneymanagement.org, and check out our education session for tips and tools and webinars on how to implement a rapid repayment plan. A debt snowball isn't for everybody. In fact, some people were struggling to pay bills before the pandemic and may find themselves unable to manage all their debts once the crisis is over. If you were behind before coronavirus, or if you find yourself unable to make your debt payments, or as a result of being impacted by coronavirus, you just can't seem to catch up, please consider talking to a credit counselor. Go to our main site, moneymanagement.org, and you can learn more about credit counseling and debt management plans and how they can help you. And remember, you really are not alone. Everyone is affected by what's happening right now. And the important thing is, we're all in this together. As we've talked about, many organizations, as well as federal, state, and local government agencies, have already established plans to help. And your community has some great resources available too. Please remember to visit www.moneymanagement.org/coronavirus to sign up for the Success newsletter, where you can read regular updates and FAQs as circumstances change. I hope this information has been helpful in giving you some ideas on where to start and how to approach your finances during this difficult time. Thank you again for joining me today, and have a wonderful afternoon. Stay safe, everybody.